Hang on a second. I have something very important to talk to you about regarding your 2020 taxes. We have just a few weeks left before 2020 is over, and I have 8 tips on things you ought to be doing to reduce your taxable income in 2020. Here's number 1. Do you have any losses in taxable investment accounts? Losses are a wonderful thing in December. They're not fun. Nobody likes losses, but here's something to consider. If we sell your losing positions, you can apply those against any gains you may have this year, realized gains, or even better, income. Income's your highest taxable asset. So if we can reduce that income, that's our secret sauce right now. If you have realized losses from years past, we could even apply $3,000 of those realized losses this year and maybe going forward if you still have more left over. Number 2, realized or unrealized capital gains. Maybe you had a portfolio that had a bunch of losses on it and you want to take some of that money, some of that profit in those positions that you have in your taxable investment account. Take the profit off the table. You don't know what the future is going to hold. And now is a wonderful time to start thinking about rebalancing your portfolio. In doing that, if you take those capital gains and apply them against capital losses, you can put some of that money back in your pocket without paying taxes on it. Need help on that? Click on the link below and let's schedule a time and talk about what the opportunity might be. What about RMDs? If you're 72 years old or older, you have required minimum distributions usually. It used to be, prior to 2019, 70 and a half, but now it's 72 years old. Here's the catch. In 2020, you didn't have to take required minimum distributions. So talk to your tax accountant about what the opportunities might be on that, or give us a call. Click on the link below and schedule a meeting with us. Number 4, what about your income? Did you have a better year or a worse year in 2020? If, like many Americans, COVID set you back a little bit and 2020 was a tough year for most businesses, your income might be lower. What's the opportunity in number 4? If your income is lower, you may want to convert some of that 401k, some of that IRA into a Roth account. This concept is called buying the government out of your retirement plan. And it's a great time to do that because in 2018, the Trump tax cuts came into play, which give you more broader tax brackets so that you can convert more money at lower rates than you used to be able to do. In addition, you have a better standard deduction. So your tax rates may be lower than they have been in the past. Would you like to know if that's true or not? Well, here's one thing I would like to offer you. If you click on that link or button below to schedule a time with us, we have proprietary software that will help us take your 2019 taxes and run them through our software, make adjustments, and determine what your potential 2020 tax burden will be. There we'll have real numbers. That's the beauty of this business. It's all about math. We can do the math and determine what strategies can we incorporate for 2020 to reduce your tax burden, and most importantly, reduce your potential retirement tax income, convert that to a Roth this year. What about, do you think taxes are going to go up in the future? I just walked you through your taxes being lower in 2020 through 2025 due to the Trump tax cuts. Will your taxes go up? Mr. Biden promises you he is going to raise your taxes and you may fall into that burden. So now's the time for us to analyze, project, and figure out tax strategies for 2020, 2021, all the way to 2025 with the best information we have available. Again, click on that link or that button below. Let's schedule a time to talk and make a projection and do the math and determine what's the best tax strategy for you. Here's number 6, maximize tax brackets. There is your federal tax, there's your state tax. In some cases, there's your city tax, but in the federal tax, it's a graduating tax bracket system. So you may be, like most Americans, in that 22 to 24% tax bracket, but your standard deductions bring you lower, maybe 14, 15, 16% tax brackets. You may never see those tax brackets again. And so again, like step number 5, we should be looking at, is there a Roth IRA conversion opportunity in there? Specifically, is there a cheap way to buy the government out of your retirement plan? Here's number 7. What about charitable contributions? This is the time to max out your charitable contributions for the year, to have those apply against your taxes in 2020. There are a lot of needs out there right now, given COVID, given the economy of 2020, given all the challenges that humanity has faced this year. Those charities are in real need. And this is a real opportunity for you to adjust and amend what could be your future tax burden for 2020. Here's my last one. It is, are you maxing out your retirement plan? I mentioned before Roth IRAs. What a wonderful time to do a Roth IRA, but maybe you need to reduce your taxes rather than increase your taxes. Well, let's max out the 401k, the IRA, the simple IRA, or the profit sharing plan. In all these strategies, and I have a whole bunch more, we have created an end of year tax planning checklist. And I'd like to give you one. Click on the link or the button below. Let's schedule a time, run some of this analysis, get this end of year tax planning to you today, and let's adjust what could be your 2020 taxable income.